Chips? No, we're not going to talk about chips today. We're going to talk about drugs. Can rotation save this market? Maybe some of the big boys topped out, but what about the rotation? Are they going to buy the laggards? Is that what's going to save this market? Well, we'll discuss that in a few minutes. CC Lagator, 8:35. If you have listened to any pre-market prep guest ever, you got to listen to CC today talking about this options expiration, just a ton of information. Let's get right to it. AB, he's ready. He's in St. Louis. This is Friday. It's Quad Witch. Pre-market prep starts right now.
Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
Folks, we're in the red by 9 handles, 55, 35, 50. Spent a little time above that closing price, but above that low from yesterday. The buck still strong, up 21 cents, 105.44, moving up to that May high. TLT sold off a little bit yesterday, still elevated though over the last week or so, week and a half, up a dime, 93.95. Crude in the red by 11 cents. Gold on the road to recovery, up 12.10 and 23.81.10. Silver going the opposite way, down 26 cents at 30.56. And Bitcoin again in the red. Let's call it 1150, just under 64K. Let's bring in Triple D. Another Quad Witch expiration, and it doesn't. So many times we've had this insane buy imbalances, right? And just these juicy opens, but now doesn't look like we're gonna have that. I'm a little disappointed.
It's hard to say. We're early here yet. AB, come on in here. We'll talk some markets here. There is some imbalances. It is quadruple wedge. They are big to the sell side and the buy side.
Really?
Very mixed. I think what you're going to see is going to be another one of those rotation type mornings where we go from leaders to laggards and laggards to leaders. Nvidia's down another $3, so the follow through. Robinhood traders, sorry, wrong again last night.
Were they bidding that up?
Of course they
were. They really? How high?
Of course they were. I don't know. I saw 132, so it was down the entire pre-market session. Within 30 minutes of being on Robinhood trading, they had it up $2. And then the real liquidity comes in at 4 o'clock and they just hammer it back down. So I don't know. The Robinhood traders just on that overnight action. Again, I see it through Interactive Brokers. They hold the same markets. So yeah, it was up last night. I sold Nvidia up last night, actually. That was
you're
the trade.
right.
I had bought the close and I actually flipped it out on Interactive Brokers after hours, which is, I believe, the same market maker. But
132.64, because they throw their prints up now. Those are the
yeah, you're seeing them. That's a good call, actually, Joel. You can see the prints now. So if you're seeing, all these prints going off at 130s, 132s, that's right at the 8 o'clock Robinhood dump. Yeah, coming in now though, really trading.
There we go. There it is.
That's your Robinhood. That was your Robinhood trading last night. So if you want those prints, you got a Robinhood or Interactive Brokers. I don't have Thinkorswim, TOS if they have that. Let us know. Chat. I just have IB, but same markets. They make it fairly tight off Robinhood. So kind of cool. If you want to get out, you can find an out. Just got to make sure you're not chasing.
So you don't need a Robinhood.
I definitely don't want to chase on Robinhood. I'll tell you that much.
Wow, look at that. Well, yesterday, I just want to point out, because it did that, we're not going to spend a lot of time on this this price action, but remember when at the start of the show yesterday, just kept on popping up to 140, 150. We were doing it. We were watching it to 1 minute, and they would go up there, then right back down. And they print again, right back down, print again, right back down. And that turned out to be, I said, there's a seller at 140, 150. Unfortunately, you never got to see that in the pre-market. But Dennis, we know there's a down day. You've been waiting for a down day in Nvidia. This is the pullback everyone's been waiting for. You just forget that red candle. It's Nvidia. I mean, you were at the pre-market show. You were looking at the 150 calls for today, right?
Oh yeah,
it expired today.
Oh
yeah.
Right.
How many are you gonna buy? at a dime or a
Yeah,
teeny.
no, unfortunately, no. I think it topped out yesterday, so it was way overbought. You know, we had Christian from her. It's on the closing show. I talked on the closing show. The stock was up 40% in a month. It was way overbought. So here is the flush, the inevitable flush. It always happens. Does this mean the Nvidia story is over? Does this mean AI is a fraud? Does this mean, Nvidia is a fraud? No, it doesn't mean any
I
of
haven't
that. It
heard
means the
people
stock
calling
was
it a fraud.
overbought.
People
There's
calling it a fraud?
they're making up the numbers. That's how bad it got on Twitter. Multiple people calling it a fraud, saying they were making up the numbers now. I'm like, this has just gone ridiculous. Like the bears are just reaching here. But anyways, the bears are going to have their day. And you know what? They're going to prance around and dance around and have a party and a parade and everything and say, we told you so, as Nvidia gets back to where it was last week. As it gets back to where it was last week. So is it going lower? I think it's oversold. I think it could easily see 120 today. I think it could easily see 120.
120?
I think it could see 120 today. I think it could.
When was the last day that we had AMD close up and Nvidia close down?
Is that not incredible? And here is the real story, AB. It was the laggard trade yesterday. All the leaders. It wasn't just Nvidia. We talked about Eli Lilly. We talked about CMG. Look at CMG. Got zero press. Nobody even mentioned it. It lost $200 yesterday.
$200?
It's a $3,000 stock, so
That's
but still 6%, 7%. No news. Just coming off. So the crowded leader trade went to the laggard trade yesterday. And what do we mean by laggard? Stocks like Gilead. Had a headline. It was a decent drug news. You can say it was all news, but I will tell you, if Gilead reported out on a day Nvidia was flying, they wouldn't even care. But they were looking for laggards yesterday, and the laggards were just humming across the board. Everything except China, because they just don't ever go up. But other stocks, there was lots of laggards yesterday, really starting to show some life. Obviously the pharma. There was a pile of stocks up yesterday. Like, I don't know if you have the stats, AB, but I felt like there was more stocks up yesterday than down yesterday. Is that correct?
I don't have the exact number, but what I did check, or what I was able to find, was the equal weight S&P 500 index finished in the green, which shows you that there were more companies, at least in the S&P 500, that were in the green yesterday than red. But of course, the big boys, you look at Apple, Nvidia, etc. A lot of the same names that have been leading this market, to your point, Dennis, closed in the red yesterday, and we ended up with a red day, which when we're in a market like this, it's kind of surprising. I'm like, oh, I forgot that stocks go down too. I thought we just made new all-time highs.
Wingstop. Look at Wingstop. Look, the chat is on fire here. Wingstop.
Give us the laggards.
Yeah. Well, look at Wingstop.
Wing was a Momo play. So Wing coming off. So you have two groups, and we've been talking about this for a while. It's why I trade Eli Lilly and stuff, and even CMG. You can trade those with Nvidia because there's the Momo trade and there's the non-Momo trade. The non-Momo trade, laggard trade, caught some fire yesterday. Obviously, you brought up AMD. It's been lagging like crazy. All the chips have been going. It hasn't been. And then yesterday, they'll say it was a headline. Media will always say it's a headline. Sure, there was a headline. There's a headline AMD every day. There's always a headline to grab. NVIDIA has headlines every day. It's always a headline to grab. But what really drove that yesterday, it was a laggard. It's been a laggard. And it's, had a little bit of a good day yesterday. Does that mean it continues? Does that mean we now sell all the Momo and we turn around and buy all the laggards because that's what's going to work? Maybe for a couple days, but I don't know if it changes, institutional money managers' thoughts. Like, these laggards lag for a reason, that they're just not sexy names. But, there's a lot of names, and the chip that really started this wasn't Nvidia yesterday, believe it or not, folks.
Micron.
It was actually Micron. Micron was the first chip to fall yesterday. Yes, that pun is intended. First chip to fall yesterday was Micron, put in the double top from the day before.
The old double top.
Almost perfectly. It was up in the pre-market. They opened that thing at the high tick, and it was down $6 in literally, it felt like 6 seconds. It was so fast from 156 to 150. And then I was like, ooh, that's not good. And Nvidia was still green, and there's still stocks green. I was like, I don't know, man. That's not good when you get Micron, who's been a leader here too, falling like that. And it kept falling. And it's continuing to fall. Micron leading the charge on the downside. So it doesn't get the headlines, but it's leading right now. Down another $5 here today. It was up last night, and Robinhood would have bought it up last night too, because they love, chasing and buying dips on Robinhood and doing all that stuff. But down another 5.
Buying rips and selling dips. Well, they don't sell. Robinhood, I don't think has any sell keys. You can only buy on Robinhood.
They don't have the short key.
They don't have a short key. We know that. You want to just a couple things here. Quick technical on AMD. Sometimes you get it right. Sometimes you give it wrong. I've been talking about this 50% retracement move off that 130, 138 low, 138.5 low, up to 174. Look how many times the 50 actual numbers, 157.86. But look how many times it came. It gave you really the last 2 days. It gave you a couple cracks there. That's a big level. Can't get to the top of the channel, but keep an eye on that long term. If it's pounded on it a few times. But if it goes through that 157.50, 157.60 area again, look out on the downside. You want another laggard that we talked about on the show yesterday?
Sure.
I'll give you another laggard, IBM.
Yeah, true. Big blue. And it's value too. I mean, that's the nice thing with the laggards. It's like, oh, there's value there too. Like IBM, what's trade like 15 times earnings or something like that. It's pulled back. Showing some life, showing a little bit more life here today. S&Ps are down 80 cents. IBM's bid up. I mean, this rotation is real, folks, and it can last. Like, I'm not saying it's going to be forever, but rotation can last, this can last a little while. Like, we've seen value trades come back into favor for months at a time. It hasn't been recent, though. And I just don't feel like this is the time where value is going to be the place to be for the next, 3, 4, 6 months. So it's hard to just take all my Momo out of my portfolio and just buy all value. I have both. That's why I am diversified. Yesterday helped. The diversification helped. My Amgen was doing really well yesterday. Well, it's value. And, it's the laggard trade. It's been holding back. So it was doing well yesterday. It's
Wait,
bid up
Dennis,
again here
you
this
said
morning.
the spider's down 80 cents. What are you talking about? It's down 252.
That ex-dividend today here, folks. So 547 was the close. The adjusted close for ex-dividend. I hate ex-dividend day. It's so annoying. 545.24. So the adjusted close is 545.24, down 77 cents.
And did you take that into account in your overnight positions? Not paying you're paying the dividend or not paying the dividend?
I try to just avoid it when I hedge with something else. And SPY. You told me SPY day. I was like, I won't hedge with SPY. Then I'll hedge with something else. Try to avoid it. It doesn't matter. I mean, you get the dividend. It's a little bit of tax implications and stuff. Like when I was full prop at Bright Trading, I don't have to worry about that. Everything's 100% tax. It's a little different, when I'm running my own trading corp because there is dividends in and dividends out. And, it's a little bit of an annoyance more than anything.
Okay, we have not been letting AB talk here, and
I know he's got a lot to say.
Well, you know why? He revealed to me. So he's in a different time zone. It's an hour earlier for him. He's in St. Louis. He's in his hometown, St. Louis.
Oh,
so he had to get up, and he had to get up instead of getting up at 5 to 8 when the show starts. He had to get up at 5 to 7.
And he's killing it, man. He's here. He's lively.
I wouldn't say
no, he's not. He's not the regular AB. I can just tell he's not turkey.
He's a little more tired, AB.
And you know what? And he's having some buddies over that are in town too. So he's having a big party in his house when his mom's out of town. So that's why AB's a little tired. But we're gonna let him.
House party. Me and Joel didn't get invited to the St. Louis house party.
Well,
I like St. Louis. It's a fun city.
I appreciate it. Yeah, we're going to a Cardinals game on Saturday, and the game starts at 1 p.m. and it's going to be like 100 degrees. It is.
I wouldn't go.
Right.
I wouldn't go. Why would you go?
We're hitting the Cardinals game. It's going to be fun.
Are you going to be in the shade?
I don't know. Maybe we'll see. But I was thinking about it, and I was like, I wouldn't be surprised if at some point. I wouldn't be surprised if at one point they go like only night games during the summer here in St. Louis because it gets so hot. Like the humidity is. I forgot. Like, yesterday I was outside for a little bit and like just walking around, you start sweating, and it's like we've had some hot days up in Detroit, but I forgot that the heat's a little different down here. I forgot about that. But all right, let's talk about some drugs. We had
going into the weekend. Let's talk about some drugs.
Yeah, you know how we roll. So, Gilead yesterday reported some strong trial data for its HIV therapy. They did a clinical study, and the drug they were using, every single person got treated, 100% efficacy. So that's pretty good. When I was in school, I was happy with 100%. Pretty good. So Gilead nailed that trial. The stock closed up yesterday 8.5%. And you're seeing some follow through this morning. Stock trading up another $2, about 3% this morning. And fits with the theme of the show, just in the terms of laggards being leaders. Gilead had been down in the dumps, going down to around $60 a share from $90 a share, and now finally getting a bounce here. So Joel, I'll let you give the technicals and see if maybe we continue filling this gap or not, because I know we blew through some previous resistance, but we'll see if people are chasing this up this morning.
Okay, no one is going to chase it. Wait a second, 73.80, and that doesn't even look like it was a Robinhood print.
We keep picking on the Robinhood traders.
No,
we love Robinhood.
Yeah, I'm sorry, 73.80. I was going to say that's just crazy. That hit it at 6:00, and it's 6:00, 6 to 6:30, Brett, or 5:30 to 6 bracket. That's unbelievable. Wow. I don't even know what to say for that kind of move, but let's settle in right here.
What was the headline today?
I don't know.
I don't know if there was another headline. They just decided to buy it up another $5 after $5 yesterday. That's incredible.
It was I think they said something about AI. Something about AI drug development.
Gilead AI. Well, there's an I in there. And in the actual name, there's an A and an I in Gilead. If you go do them out of order, there's an I.
The high of the day is in. I'm ready to do my old walking on my hands downtown the lodge, even though the pavement would be really hot today.
I think so too. I'm with you. High of the day's
That's
in.
crazy. I'd say if this thing now it's off at $1.60, I'd say if it sees 72 and there's only one daily high at that area, actually it's just below. Wait, is there a 72 high? Yeah, I mean, wow, 72.
This headline too, HIV drug. Are we still have an HIV problem? I don't even hear about HIV anymore. Like Magic Johnson got HIV 50 years ago, I feel like, and he's still around here. Like what? Like obviously AIDS was a thing back in the 80s, and HIV was a huge thing back in the 80s. It was going to kill everybody. But you don't hear much about it anymore. I'm sure there's still some people that have it out there, but it doesn't get any headlines whatsoever. So when this started popping 10% on an HIV drug, I was like, is there a lot of HIV cases? Like, I don't know. Like, I'm asking the chat here as well, because I didn't think HIV was a huge thing anymore. Maybe it is in, different countries, but it seems like here in North America, you don't hear much about HIV anymore. Do you guys know, like, or hear anything about HIV or know anybody that's had HIV?
No, so I think a lot of the drugs that have been out, like Prep, Truvago, have helped, and that's why you don't hear about it as much. But I think basically the market reaction to this is that this drug from Gilead is supposed to be better than those. You've also had in the past, Moderna has shot up higher on positive HIV news on certain times because they're trying to use like their mRNA technology to treat HIV. So there's like precedent for other companies that have gotten pops based on positive HIV data. But I mean, I don't think it's like the biggest problem or thing that drug companies are going out to fix right now. But it's obviously still around. It's not the epidemic that it was in the 80s, but it's still around.
I think I'm with Joel. I just think it had its day. This is an eternal laggard here. Maybe if we really go into this laggard market, these things, but when the laggard trade comes on, it's usually a good opportunity to sell because laggards continue to go back like 73, 75 Gilead. This has been, to Spinner's point, this has been the dog of all like pharmaceutical stocks. Like, has there been a worse one? Like, look at the long-term chart and bring up the long-term chart of Gilead. Like, go out like forever. You go back. Like, this stock has gone nowhere. And I guess, if you go back far enough, 2012. But really 2015 we were 75 bucks. So here we are 10 years later and we're still at the same price. I guess you got your dividends in there, your 3-4% dividends, but man, this just been the laggard of all laggards. I mean, even if you bring up any pharmaceutical stock, maybe Pfizer's bad, but Merck's way up from there. Pfizer's probably even up over the last 10 years. Pfizer up over the last 10 years? Well, no, Pfizer sucks. Pfizer's just terrible. Mayor and Bristol Myers has been terrible too. Bristol Myers is down over the last 10 years as well. So I just Gilead, you know where they went wrong was when they actually solved that one. What was it? Hep C, when they came out with a drug that actually cured the disease. And now everybody's scared to come out with drugs that cure diseases. They got to come out with the drugs that maintain. We help with the symptoms, because they come out and they kill the disease, and then it's like, well, they can't sell any more drugs. Such a bad world for that. But I mean, that's the truth. That actually did, harm their performance when they came out with the drug that actually cured the disease, because none of the other,
that was a long time ago.
That
was a long time ago.
Long time ago, yes.
Let's do some more drug stocks, AB.
There's a song about that.
All right. Well, we had there's a new weight loss drug coming from Zealand Pharma. Has announced a new weight loss drug, and I'm surprised actually. I've seen that Eli Lilly and Novo Nordisk aren't trading down at all on this news. And I don't. So this company, the Zealand Pharma, is traded on OTC ZLDPF. So I don't know if we got
off the board on this one.
I know. I wasn't
on a radar here. I was thinking you'd go to Sarepta, but
that's what I was thinking too.
We were both kind of thinking Sarepta. It's early in the morning.
Zealand Pharma. I'm like,
I don't know what Zealand Pharma is, but it looks like that bottom chart has been doing pretty good.
I wish I would have heard about it.
Let's go over to Sarepta, because I can't trade Zealand Pharma, so we're going to bring you back and just help you. It's early over there, so let's go to Sarepta. We picked on you a little bit. So Sarepta a little bit there.
He's on one screen too, Dennis. He's just on one screen.
Sarepta's trading up 38% on broad approval for a muscular dystrophy drug. That's about all I got.
So lots of thoughts here. So one is Sarepta. Obviously this is their drug. This is, what they've been waiting for. It got halted last night and they got the official approval here. The stock popped up all the way back to all-time highs. At one point in time was trading up over 50% here, was running up the XBI, was running up the IBB. I actually was short XBI last night. And Sarepta news came out, it was halted. I was like, I got to go find out, so you're sitting there waiting. Is it approved? Is it not approved? It got approved, and I was able to lift. I lifted everything I possibly could. I lifted all the way from 90.05 all the way to 90.15. Then obviously 90.51.
Was there much in there for
it's only 1%, but I knew Sarepta's going to pop like huge.
No, I know, but that's like a dime in like pre-market trading.
No, 1%. If a stock goes up 50%, is actually 0.5%. We'll teach you all the grade 1 math on that one. So,
yes.
So when it was up 50%, that's just 0.5% just.
No, I was talking about the XBI. Not was talking about.
In the XBI, it's 1%. It's roughly 1%. So that would be a 50-cent move in the XBI.
No, what I was talking about, you said you lifted things from 90.05 to 90.15.
Yeah.
That was a dime range there. I just didn't think there would be that, that
it's
much liquidity.
Thin. So there is and I lifted everything. I lifted every single share. So I lifted every single share. So if you look at the trades, every single share I could get. And then it was like 90.20, 90.25, 90.30, and I wasn't paying up to 90.30 because, again, I gave it 50 cents. I figured it was worth 90.40. So, but I was short. So I'm like, it's even like I trade so much better when I'm on the wrong side of the trade. It's actually the truth. I'm actually trade as a trader because I'm like focused. I'm like, I'm wrong. I'm dead wrong. I got to get this covered. And when the new stock got halted, I didn't cover right away because I'm like, well, what if they don't get approved? It's in the tank. You're in a 50-50 shot. So once they say approval, then you're just grabbing. Sarepta's halted. You can't grab Sarepta at that point in time. Sarepta's halted. So I went out. I tried to grab IBB too. There was nothing on that. But XBI had some liquidity. I don't know what there was. There was a few thousand shares.
No. It's interesting. No, because I mean, you reacted to it. I just didn't think.
You got it. When you're on the wrong side of the trade, This is where I'm the best. Like this is where I trade my best, is when I'm on the wrong side of the trade and minimizing damage. So I've always said this. The reason I've been successful as a professional trader for 25 years now, I haven't had a down year my day trading account in 25 years. You can go check the stats, Bright Trading, call them up. I haven't had a down year in my entire 25-year day trading career. The reason for that, now investing I have. My investment account goes up and down. You know, if you have financial crisis that gets killed. Those are separate accounts. But I'm saying in my day trading account, which is just geared just to trading, I haven't had a down year in 25 years. The reason for that is not that I'm a great stock picker and I look at these awesome charts and I figure all this stuff out.
Oh, it's all about the charts, Dennis. Don't be a closet chartist like that.
It's that I recognize when I'm on the wrong side of the trade and I'm quick to minimize damage. So I didn't make money on that XBI. I was short it, but I was able to get covered most of it. I bought everything I could. I still couldn't get everything covered. So I bought every single share that was there and I still couldn't get it all covered. I'm still short some XBI from last night, a little bit, but I got like 90% of the position covered. I wish I could have covered. I would have went long. I would have totally reversed and went long if I could have, but there just wasn't enough shares there after hours. So you grab as much as you possibly can and that's it. And then, so that's all you can do. You short a pile of stock. You try to cover as much as you possibly can up to where you deem fair value. I deem fair value like 90, 25, 90, 30, because I don't know how high Sarepta is going to open. I just know Sarepta is going to open up significantly. It opens up 50%. You now know that's worth 0.5% in the XBI at a bare minimum. So that's saying nothing else is going up in there. That's just that stock. So that's just the ETF arbitrage. You know, we're giving a little bit of examples of how that works.
Do you use that skill of when you're wrong, when you have disagreements with Laura? Like, do you recognize like when you're having an argument and you're wrong?
You know, I'm just always wrong there. So you can recognize that you're always wrong there. What about you, Lisa? With Lisa, let's recognize
it depends.
When you're right, you're wrong.
Yeah, no, it's a long discussion, but you gotta like limit damage when you get to that point. You know,
that's all it is. If you're a day trader, if you're a long-term investor, you've got time horizons. You can trade a little bit differently or invest a little bit differently. But if you're a trader, if you're a day trader, you absolutely have to minimize damage. You have to take losers. Folks, write this down. If you're a day trader, you have to be willing to take a loss, because if you're not willing to take a loss, eventually your day trading portfolio will all be tied up in losers. Inevitable. It has to happen, because you're not going to pick stocks 100% all the time. You're going to get a bad pick. Even if you're a 90% stock picker, that means, well, 1 out of 10 is going to end up being a loser. And that loser is going to sit in there and it's going to rot, and it's going to start rotting your portfolio and then rotting your mentality and rotting all that. You have to. The best traders in the world take losses. You think Kenny the GOAT, Griffin, you think he doesn't take losses? You think Citadel doesn't cut losers? They cut losers all over the place. They're massive loser cutters, for sure. You've got to cut losers, folks. If you're a trader, you absolutely need to have discipline. That's what separates you from being a good trader.
Dennis, the people are asking you about stops. You don't use. I mean, it's because
I'm actively managing it. There's no stops after hours. I can't put a stop order in there. You know, there's nothing there, so there's no stops. So if you're trading after hours, you've got. But I'm actively managing it, so I'm trying to minimize damage. In some cases, you can't. Like I remember the day I told you, Celgene. I was short Celgene and got taken over. Taken over by who the hell bought him? I don't even remember.
Oh man, was it?
Who the hell bought Celgene?
Oh God.
Why is our memory getting so bad? Why am I getting so
No,
old?
that was a long time ago. Spinner, who someone's probably Googling it.
Who the hell bought Celgene? Why can we not remember that?
Because it was like 5 years. It was pre-COVID.
Yeah, it was a long time ago. A long time ago. I start saying that again. AB, help us out here. Anyways, regardless, I'm short Celgene. It's like $65 to close. It gets taken over for like $100 a share. Why don't sit there and okay, well, maybe it'll come back to 65 one day. No, I'm done. It's over. It's game over. I covered it like 89. And then, end up being taken out of like the 105. It was a stock deal. But, that's, you just got to
Bristol Myers.
Bristol Myers. How'd that work out for you, Bristol Myers? Cost me some money on that one, and now you're down lower. Now I long Bristol Myers, I lose on both ends. Bristol Myers. Somebody talked me into that. I think it was Jim Cramer. Okay, next.
We should talk some
That's a bad tangent.
Some gambling stocks. We had some news yesterday with Boyd Gaming looking to purchase Penn Entertainment. Penn.
Ooh, I wondered why Penn topped.
Yeah.
Huh.
Penn stock obviously took off on this, the company getting acquired as it typically does. But I was surprised this morning to see Boyd actually trading higher as well. A lot of times you'll see the company that's coming in to make the acquisition sell off, but Boyd was trading higher this morning. Is it still? It looks red to me now.
It's down. It was down. Penn was down today. Oh, Boyd. You're looking at Boyd.
Yeah. No, Penn got a pop.
No, Boyd's just not trading here. Boyd was trading down there a little bit on the rumor yesterday. Still just a rumor. Penn got a good lift on this. Penn also had, I think, an upgrade here this morning here. I believe. I'm going to Penn. I believe it got upgraded by Craig Hallam. Craig Hallam upgraded Penn, P-E-N-N. Not trading up much here. They're waiting. They're like, oh, is it true? Is it true? And then Penn said we don't comment on stuff like this. So they're like, oh, they didn't deny it. So maybe it's true. Maybe it's not true. But anyways, a little light for Penn shareholders. And it doesn't hurt that it was on laggard day. It doesn't hurt that this rumor came out on laggard day because Penn, ultimate laggard.
Yeah, and I've talked about how in this space, like I think you have your clear leaders here with DraftKings, and then you have Flutter, which owns FanDuel, and those companies seem to be doing well. And then you have the ones that have too much exposure to other areas, and Penn is certainly in that latter group. But all right, we got CC Lagator hanging out backstage. It is a quad witching day. No better person to have on a day like today than CC. So whenever he's ready, we'll go ahead and pull CC on and he can join us in this conversation. And if you guys have any questions for him in the chat as well, looks like CC is ready. Let's go ahead and give him our special intro and catch up with Mr. Lagator when we get back.
CC Lagator, founder of Options AI. We're here again, another Quad Witch expiration. CC, how you doing today?
Good to see you guys.
Yeah, Dennis is a little riled up today. Yeah, we got to calm him down a little bit. But let's talk some Greeks. Now, I'm not talking about Greek salad. I'm talking about the Greeks and the options markets. And let's talk gamma. Let's explain gamma and how it's going to come into play today.
Yeah. Well, so, it's the big, happens 4 times a year. This expiry involves the quad witching. It's really like triple witching. But the main thing is you get this opening print this morning, which is the futures expiration. So you might see some weird idiosyncratic action between the individual symbols, like say in the SPX and things like that. So you might see that on the open. And then as you go throughout the day, you're building up towards this expiration. And this is actually, a lot of these expirations, they say it's the biggest options expiration ever. And this one is. And I think this one just beats the one back in December. Now, there's a couple of different ways to measure this. There's a headline that always kind of cracks me up, and it's like, there's $5 trillion of notional options interest expiring today. And I'm like, 5 trillion? Like, I don't even, what that means is, if you take all of somebody at Goldman Sachs, some summer intern had to go through and add up all of the strikes and all of the option contracts.
A little disingenuous.
It's technically worth $5 trillion. And it's like, if the SPX opened at 0.
Everybody loses all their wealth if it is
totally,
zero.
So anyway, that headline's kind of ridiculous, but the point is that there is a ton of options expiring today. There's a ton of options in SPX, everything like that. Obviously, a ton of options in SPY, Qs. And then there's a ton of options in Nvidia and some of those stocks, which have been really active recently. And so let me mute real quick. Hold on one sec. That was my Alexa alarm going off.
Actually, that was Goldman Sachs calling.
That was Goldman calling.
They're shutting down your account now for making.
They were offering me a summer internship. free.
Oh, good.
Yeah, unpaid. So, but anyway,
6 to 6.
Yeah, and so it's funny, Joel. You asked the question, explain gamma, and it's funny because we do this show often on expiry day, so we end up talking about gamma. And so basically, just short story, the gamma in the market is it accelerates as you get into expiration. It has a bigger and bigger effect, and it's non-linear, and it gets really, as options get to 0 or 100 deltas, that essentially means market makers delta hedging becomes more and more of an effect within the market, right? And when you get either, if the market makers are long gamma, you get a ping pong effect that kind of pins the market into place. And in times when the VIX is like 30, you get the opposite. And market makers are chasing sell-offs lower, selling them lower, and then buying rallies higher, right? So we are in a low vol environment, which basically, I realized I've never sort of explained how the gamma gets there to start, right? So there's all these funds that, and they've actually become bigger and bigger the last couple of years. So you can invest in a fund that is essentially long the market or long a basket of stocks. And they are basically selling upside calls against those holdings, right? And they're doing it in size institutionally. And these are, for the, people watching, the people still watching that I haven't bored yet, they are selling covered calls against these holdings, right? And they're creating income against your, what would be otherwise a naked mutual fund or ETF. So what that normally looks like in a normal environment is a lot of sold calls above where the market is trading. And the market makers, the people at Citadel and places like that, are sitting on all of those long calls, say in SPX. And so as the market rallies, if you notice during these like sort of creeps higher in the market, like over the last 2 months, the SPX will go up 50 points, kind of pause for a couple of days. We'll go up another 50 points, kind of pause for a couple of days. And that slow creep, you can kind of see that staircase higher, is basically it hitting all of those strikes, right? Those big accumulated strikes that a lot of these, a lot of these funds have sold calls into the market, right? And what ends up happening is as you get to expiration, particularly, there's expirations every day, there's expirations every week. The monthly ones are really big because these funds seek out liquidity, right? They want to be able to get out of these trades too. So they look to the monthly expiries and they look to these quarterly. This isn't technically the quarterly, but these, the June month, those months for the liquidity. They sell a bunch of options into this market. The market makers are long them, and that creates that gamma, right? So what happens after expiration is a lot of times, and it's kind of striking when you go back on the charts for this year, these expirations days have ticked a lot of lows and highs of the trend. And we've been on, or I've been on the last couple of expirations, and it has been an inflection point in a lot of those. And the reason for that is all of that option stuff that I just explained, like a third of it goes away on Monday morning, right? And then it takes, 3 weeks to build up for next month. And it really takes 2.5 months for it to be as big as it is today, right? For all that to build back up. So that's not necessarily saying that we're going to walk in on Monday morning and like the futures are going to be down 2%, but the conditions are ripe for something, for more volatility next week. And you could see yesterday afternoon when we saw the little bit of selling, that's pre this happening, right? And it's a lot of like rolling and positioning and things like that. And we can get into sort of what happened in Nvidia. But Monday morning, the backdrop completely changes. And so if we were to get like a news story next week or a Fed comment or something like that, the backdrop is actually better for the market to make a move, even lower, higher, anything like that. It's sort of less pinned, if that makes sense.
Real quick, gamma scalping. Are you familiar with that term? Someone asked about. Yeah. Could you explain that real quickly before we move on?
Yeah, so I'm a former market maker, right? And so market makers, at least myself, I always liked it when I was short options better, right? I could, I could handle coming in the morning, seeing the futures like up a point, up a percentage point or down a percentage point, knowing I probably lost money overnight and then I could make it up during the day. The opposite is true when you're sitting on when everybody has sold you a bunch of options, right? And so you're long all this gamma. You come in the morning, you've lost money overnight from all the decay. And you've got to sit there and scalp all day long because as the market goes higher or an individual stock, you are adding deltas. You get to sell stock. And when the market then drops, you are buying stock. But it is exhausting, right? Having to do that all day and make up for all of those options time value starting to decay throughout the day. But that's what causes like these pins that we're talking about. So if you have a level in the market right near like a big round number strike, that is and you see it sort of go up 10 points, find sellers, go down below the strike 10 points, find buyers, and keep coming back like in the SPX. That is the sound of 1,000 market makers scalping their gamma. And that's what creates those pins. And then it accelerates as you get into expiration.
CC, what about, hitting some key levels here on this quad witching day, like the SPX here at around 5,500? What happens here with all this extra volatility when you have these indices sitting around kind of like key levels here on the charts?
Yeah, this one's a little less obvious than the last couple of times I came on, where we basically were like, I think we nailed it to the number where it was going to pin those days. This one's a little less obvious. I will say the 54.50 in the cash, right? And the futures are, what are we down about 0.2% or something?
Yeah, a little bit less, 0.12 right now.
So let's figure we open up like 54.60 or something like that. That 54.50, 54.45 level is one to watch because it's probably a lot of support today. So if the market kind of got ugly this morning and it extended this kind of pre-market sell-off, if we got down to that sort of 54.45 level, as a day trade, that might be worth taking a shot down there. There's a lot of support down there. And then, obviously in the upside, that 5,500, we kind of got rejected right above that yesterday. Going out beyond today, if we were to see like what we saw yesterday afternoon, if we were to see the market kind of, like the air come out of the sales of some of these high flying stocks like Nvidia, the market kind of pulled back a little bit. And, what we were talking about, happening next week, like the market is opened up for a bit larger move and we see a little bit more volatility. The big level to the downside is 5,300. Right. And it kind of lines up, and that's both from an options perspective. And this happens a lot of times. It lines up with some sort of, technical levels as well in the SPX chart. So if we get into any sort of extended pullback, like over the course of a couple of weeks, that's a level to look for.
I'm just looking here.
Go ahead,
so
Dennis.
let's get overall thoughts as for this day. Like obviously we have a lot of options expiring here to your point, CC. I mean, how do you approach a day like this? Like let's say you're a trader and you're coming in, and you're seeing, Nvidia is getting killed yesterday. It's a little bit of follow through today. How do you approach a day like this, just as not a market maker, but as a trader, knowing what you just was telling us?
Well, so I think, if you want to do like a quick shorthand cheat code, I would look at the VIX and overall volatility. And in a case where the VIX is 12 or whatever it is, and like if you look at like SPX volatility today and tomorrow and Monday and things, it's super low. That is a cheat code for telling you that the conditions are not ripe for a big follow through move intraday, right? And so when the vol is low, you can basically say, I think it's a pretty good chance to buy the dip and sell the rip intraday, right? Now, if we were talking on a day where it was like, you know, VIX 22 or something, and it wasn't an obvious capitulation day like the VIX 30, where I would say, oh, you might want to buy the market down 3% today because we might get a reversal. But if it was like a VIX 22 day or something, the opposite is true, where all those market makers are kind of like on the wrong side of any market move intraday. And in that case, I would be very careful about moves, and you might want to kind of press like a sell-off or anything like that intraday. But on a day like today, if you saw the expected move for today is about 0.5%, we're not even close to that, you know, pre-market. But if you got that move down to, you know, that 50 level or that 45 level in SPX, it's a pretty good likelihood that you're going to see a bounce intraday, more than 50%, put it that way. And so I would use the overall volatility, the implied volatility, and the VIX is obviously the cheat code for the SPX. I would use that as my guidance. Is options generally are pretty short duration. And when you see a lot of, you know, when you see a very low implied volatility in the SPX, it generally means that you're not going to see big moves.
All right, let's go to the stock of stocks here. Nvidia options, probably just trading like water. 10-for-1 stock split. Bad day yesterday. Tell us what you've been observing in the options and what traders, investors could be looking at today as possible scenarios in this. I mean, big reversal yesterday.
Yeah.
Let's just go to the big dog, Nvidia, trading down 224.
Oh, yeah. So everything I just explained in SPX and what institutions do and everything and the setup of market makers, forget everything I just said. Because Nvidia and a stock like Nvidia is the exact opposite. And it's rare you see this. You used to see this in Tesla back in the day, right? When it was the Nvidia of the day. You know, you see this obviously in the meme stocks and things like that. So basically, Nvidia has the opposite setup. And so this 10-for-1 split leading into it and coming out of the 10-for-1 split, you have a bunch of retail interest and incredibly renewed retail interest in this stock because they can afford these options. They can obviously afford the stock more. With that basically supercharged this rally over the last couple of weeks. And there's a massive amount of options in this thing right now. There's more options expiring today in Nvidia, and there's more options open interest overall in Nvidia than there is in SPX, SPY, Qs, everything, right? Not combined, but it's more than everything. So Nvidia has the most options expiring today of anything in the market, which is incredible, maybe unprecedented. And a lot of that has to do with the 10-for-1 split. So basically, if you think about what's been going on in Nvidia and this rally, this is market makers short all of these calls as if they were, you know, puts in a normal index or Apple or something like that, right? And as Nvidia has been rallying, these days when you come in and you're like, Nvidia's up another 2%, you know, pre-market or at the open or something, and it's been like relentless every day. That is the sound of 1,000 market makers coming in the morning and finding that they're a little bit like short delta, right? And buying Nvidia higher. And so they're helping. They're on the same side as retail, and they're buying the stock higher and higher and higher. Now, the interesting thing is you approach expiration. What happened yesterday in Nvidia is not shocking. And obviously there's a million reasons, and options is only one of them. But options can accelerate this kind of move, you know, from late yesterday into today, because now all of those upside calls that the market makers are buying stock against, all of those deltas quickly approach zero if they finish out of the money today, which means market makers are over-hedged. They own too much stock in a stock like Nvidia. And so they have to turn around and actually sell into the close yesterday and then today into the close again, right? They're overhedged. All of the upside calls they were terrified of getting their faces ripped off on are going to finish out of the money most likely today. So then, the backdrop again in Nvidia changes into next week. It probably doesn't change that much, but Nvidia is kind of interesting because, looking at that chart into yesterday at noon or whenever that sell-off began, I mean, that a pullback was coming, right? It was just, you could not get in front of it. Like, how could you ever short that stock and time it correctly? But in hindsight, going into this expiration, it kind of makes sense in hindsight, right? Once that move started, you're like, okay, I kind of think I know what's going on here. And then that's on top of all the rotations. And obviously somebody needs to start it off by selling a bunch of stock. And then the options market kind of accelerates something like that.
All right, before we let you go here, going into this expiration, a lot of liquidity out there. We always talk about hedging, which, works out sometimes, doesn't work out a lot of times. What should investors, let's go a little bit longer term here, or medium terms, swing traders here, what to trade here, what to look at for possible hedges, possible scenarios?
Yeah. And somebody actually in the chat asked earlier about, buying low vol, selling high vol, which is absolutely correct, but you have to go far enough out for that to work, right? In the short duration, selling options when the VIX is low, actually, you're probably going to be right more than you're wrong. And the same thing, if the market's whipping around and the VIX is at 30, buying options like short duration over the next couple of days, you're probably going to be more right than wrong. But going out, say to the end of the summer, to your question is, I was thinking about like hedges in general. I don't love recommending hedges pretty much ever because 75% of the time they're going to be wrong, right? The market goes higher most of the time. But I like hedges if you think there's a chance of a market pullback or a pullback in a stock like Nvidia or AVGO that could shake you out of the stock, that could basically scare you and make you panic sell a stock, that's where I love hedges, right? And I don't love spending a ton of money on them, but you look at Nvidia, that last time that stock, and just, again, you just use it as an example. There's obviously other chip stocks that look like this. The market looks like an obviously less insane version of this chart. But if you are worried about a pullback in, say, in Nvidia, and last time it pulled back, I think like 17% or something in April, look to take a put spread or something, go out a month and a half, 2 months, let's say, and look to spend as much as you not panic selling Nvidia down 15% because you think you've missed the top of all time. And you're going to forever regret, right? So the worst thing you can do in a stock like this, obviously, is ever sell it, right? Like the last couple of years, if you sold this, you would feel so bad. So I like hedges for, like, I want to own Nvidia 3 years from now. I think it's going to be higher. Occasionally, when it gets this extended, spend a little bit of money on a hedge. And the way
actually buy a put.
Yeah, and the way I like to do it,
put spread is what he said.
Put spread.
Or a cheap put or whatever. And both kind of work. So if you're doing a spread, the way I would kind of do strike selection is I would do it down to the level where you would, look at the chart and honestly say, where would I actually buy Nvidia? Like for the first time, right? And it's probably down 15% or something, right? And I don't mean for like a day trade. I mean for an investment. And if you did like a put spread down to that level, that's all of a sudden, not only have you protected yourself, you've given yourself ammo to potentially buy more Nvidia at that level, right? And to Dennis's point, if you're just doing a straight put, do it at a level where you'd be like, I might actually be a buyer down there or just below there, right? And it gives you that ammo to sit there. Because everybody says, oh, I'd love this stock to go down because I'd buy more. And then it happens and they sell.
They don't.
And they sell, right? So that's the way I like to use options, is basically say, you know what, I'm actually going to stick with my original plan, which was if Nvidia comes in 20%, I'm going to buy more, right? But the reality is everybody gets to that point and they're like, I'm done, I'm out,
Okay, all right. CC Lagator talking to us about this quad witch expiration, Nvidia options, always an education.
Oh,
CC,
so much
we're good.
education.
Dennis, you got anything else? Dennis, or do you
No,
want
we
for me
better
to?
go because we only have 4 minutes left here, and we got to
Okay.
cover some of these
Thanks, CC. You know
imbalances.
when you'll be on again, third Friday next month. Thank you.
Great to see you guys.
CC.
All right, guys. I'm aware of this problem with the ads. I understand that a third ad just happened.
Really?
Too many ads. Too many ads.
Was there ever any ads? People would complain
in the middle of the show. I don't know if there was ever ads in the middle of the show.
And we don't even see any of that money. I don't know where that money's going to. So don't think that we're the ones doing it.
What do you mean?
Well, we'll figure that out. We'll get the ads cut back.
Let's just get off YouTube.
Let's get off money. I'm certainly
Let's short
not.
Google. Get off YouTube. Let's short it right now.
This YouTube, they're just finding ways to steal money from you everywhere and making you watch. So, we'll figure out the ads. Quickly, 3 minutes to go here. The imbalance.
What are the imbalances? Crazy.
There is some that are just the biggest I've ever seen.
Really?
Like, so to CC's point, this has got to be, one of those options expiration where you're going to see just a crazy amount of volume. So 1.6 million to sell in Coke. The projected opening price is 0.0001.
You'll buy that stock for a penny.
I'll buy it it's less than a penny. It's projected to open at the stub quote at 1/100th of a penny.
Really?
But it's not the only one projected to open at 1/100th of a penny. Procter & Gamble, 1.1 million to sell, projected to open at 1/100th of a penny. Walmart, 1.6 million to sell, projected to open at 1/100th of a penny. GIS, 173,000 to sell, projected to open at 1/100th of a penny. Kellogg's, 1/100th of a penny. Caterpillar, projected to open at 1/100th of a penny. Eli Lilly is projected to open at $9,999.99. None of these things are going to happen, folks. None of these things are going to happen. They're not going to open that much. But right now, it's telling you there's so much selling pressure for the open that there's not enough buyers to even allow this stock to open reasonably. So, obviously, we're going to see buyers come in. I'm going to come in. I will buy Procter & Gamble, not at 0.0001. I'll pay way more than that for it. I will pay way more for Coca-Cola. So there's going to be people coming in. This is an advertisement traders. We need buyers. So they're advertising it to Procter & Gamble. They're advertising it to Coke. They're advertising it to Walmart successfully. It just went up to $16 now, actually, the projected opening. Not $68 anymore. So they're huge, but they're both directions. I don't want to give the skew that we just have so much selling pressure. We have buys out here too, folks. I'm just looking a lot of your utility stocks. Southern Corp can't even put it in a continuous can't put an opening projected price because there's no sellers. There's $1 million to buy, 1.8 million to buy in NEE. So it's both directions. But there's some really, really big ones. There's some small ones too, though. So it's not like just lit up. Like it's like some really big ones, some really small ones. And then there's some just don't have much at all. So it's a weird type of day. It might be one of those days where I'm actually contrarian, buying the ones that are going to open too low, shorting the ones that are going to open too high. I will be trying to do that. Sometimes you don't get anything. I use OPG orders for it. They fill or they kill. But I'll be providing liquidity into this open.
Right. And by doing that, you're avoiding the flip, right?
Yeah, like some people gamble and say, oh, there's 1.4 million to sell. I'm going to sell it in the pre-market. Like for example, Coca-Cola, 1.5 million. Oh, I'll sell in the pre-market at 62.15 or 62.10 or 62.05. Well, then it flips on you the last second, opens at 62.50, and you're like, oh, I just got killed. Because these things flip. They do that. Like there's this sometimes, there are games going on in here, but sometimes just big orders. Somebody makes 1.4 million to sell. I'll buy 2 million. And then boom, it goes 600,000 plus. So
what about Micron and Nvidia? I know it's
remember, NASDAQ doesn't post until 9:25, so we can't get any information on that until 9:25. So 8:00 a.m. New York Stock Exchange posts their imbalances. NASDAQ does not post until 9:25. So at 9:25, we'll have some more information on that. We'll have some projected openings. The NASDAQ projected openings, because they close their auction at 9:28. So they're more like, like if it's projected open down, it often does open down. But they only give you the 3-minute look, 9:25 to 9:28, and then they close the auction 9:28. Market makers can still go in there, though. Offsetting liquidity, I believe, can still enter as well, but you can't add to it at that point in time. So the auction closes up. So just keep that in mind. NASDAQ, trade is a little bit different on the way they post their imbalances.
How about Coke is 61 here? I mean, and the other thing too is if you put in,
I'll be trying to buy Coke if it opens down anywhere in the 62 handle. I will be trying to buy Coke, not long-term investment, just as a trade.
In the 62, you mean the 61 handle?
No, yeah, in the 61 handle. Anything below 62, I said.
Anything
I'll
below
probably
60.
if Coke opens like down 50 cents on no news, I'll take a shot that it flips. I can flip it out.
And what about Walmart yesterday? I mean, that thing opened right, it had the selling balance, opened right at its low and rallied. So, all right.
Yeah, there's strength in these, so I like that. When you saw strength yesterday, now you get some weakness on the open from one seller. It allows me to maybe get into something. Like I'd be a little more cautious buying an Nvidia dip here because it's probably followed through sellers from yesterday, which is what we're exactly seeing here. So, the way I approach today is what was strong yesterday. That might be a little bit of follow through, might be what I'm day trading today from the long side. What was weak yesterday? That might be what I'm shorting from the day trading perspective. Now, long-term investing, I didn't do anything yesterday. I didn't do anything in my long-term portfolio. A couple days, I bought Oxy a few days ago. It's working out well. I also bought SMCI a couple days ago, which is almost spooking me out of this now. I bought it and it went up 100 points in a day and it gave it all back. So, I mean, obviously SMCI is moving around with Nvidia, but it's a challenging investing environment. There's a lot of balls to juggle here. There's a lot of action, where obviously it's been just Momo, but now all of a sudden value starts to perk up a little bit yesterday. It's all interesting.
All right, 8:02 a.m. Joel, who do we have joining us on Monday?
Mish Snyder is going to join us. Yeah, she's going to the Mish Minute. She's going to go over the Modern Family, and I asked her about kicking the small caps out of the Modern Family. They're just not behaving well at all. So we'll get her wide-ranging perspectives on the markets on Monday. I'm looking forward to that, talking to Mish Snyder.
All right, well, everyone, have a great weekend. Thanks for tuning in with us today. Sorry again about the ads. We will get that figured out. And Dennis, let's go Oilers.
Yeah, this is stressful. I don't even know if I can watch. Like, I'll be so stressed out.
Where were you at? Where were you watching from last game?
I was in my basement. My buddy invited me over, and I was like, I can't. I just got to sit there and watch it by myself. You know you're a hardcore family. You don't even want to watch with anybody else. You just want to sit there by yourself because I'm like, I just can't handle it. I'm so nervous. I pee like every 5 minutes because I'm so nervous. I'm like, I can't handle it, man. People ask me why I don't go to Edmonton. I'm like, I'm so stressed out. I'd probably be better if I was with other people. I wouldn't be as stressed out, but I just sit there and I just watch by myself and analyze the crap out of it. And like, then I start pacing when they were giving up the lead. It's 4-1, 4-2, 4-3. I'm pacing back and forth. And then I'm trying to talk myself. I'm like, you don't know these people. You don't even they don't know who you are. Why are you so worried about this? Why, you try to talk yourself off this like anxiety, that you have. But if you're a hardcore sports fan, you know what I mean. Joel, you know what I mean. When your team's winning, there's nothing better. When your team's losing.
What about Spencer? Does he watch it with you?
He come down and watch a little bit, but then I don't want to watch again. The games are pretty late though. He's got the 9 o'clock.
Yeah, you got it. You start swearing and stuff. So
yeah.
Okay. Well, hopefully, hopefully they'll pull it out. So
I don't know, man. I'm very nervous, very very nervous. So it's hard to come back. It's only one team ever to come back from a 3-0 deficit. It was 1942 Toronto Maple Leafs in the finals. That is. So I mean, if they could pull it off, it'd be like just the McDavid legacy because he's going to be the one to do it. But I don't know, man. There's a little big.
How about that Tkachuk save last game? He's a St. Louis guy.
Wasn't that was amazing? So the diving, we should almost show that the diving. It's going in the net, and he dives and he sweeps it away. And then 2 seconds later, McDavid just shoots it in the open net.
Yeah,
so it was like the play of the year to like the play that was like meaningless.
And no one's going to talk about it because it was inconsequential. It didn't matter.
Yeah, but it would have been unbelievable. If they would have came back to score, that play would have been talked about like for decades.
Yeah.
But because it'll never get talked about, but it was unbelievable. Tkachuk scares me. The turtle, we call him, because he turtles, he takes the cheap shot and then he turtles. But he's an unbelievable.
Well, that's how I'm
scared of Tkachuk.
I grew up as a Blues fan with the, Keith Tkachuk, Chris Pronger days.
Oh, yeah.
Cool to see. But just because he's from St. Louis, Dennis, doesn't mean I'm rooting for him in the game tonight. So we'll see.
You're going for the Oilers, aren't you?
I am. Yeah. All right. Thank you guys for tuning in. Historic. We will we'll see you guys on Monday.